to keep it the simplest way for your commercial property, let's say that you have a property and it's the value of the property is worth $2 million.
Okay.
So
Do we have
in
an
your
example that we
insurance
want to show?
policy, yeah, in your insurance policy, let's pull this up here.
Yeah. Pull it up, brother.
In your insurance policy, basically, they want you to have, you must carry coverage for a percentage of your property's value, usually 80 to 100% of that value. So they're telling you, you've got to have coverage of at least 80 to 100%, and they'll put 90% in there or 80%,
Yeah.
which means that
Big number.
if you, well, let's take an example of 90%. So if your commercial property is worth 2 million, so 90% of that, you have to have it insured for at least 1.8 million. Now, let's say if you don't, boy, you get penalized, and you can get penalized in a good way. So I'm going to show you guys an example here. Simple scenario. So we've got a building worth 2 million. The co-insurance requirement is 90%. So you're supposed to carry at least 1.8 million. But you only bought 1 million in coverage.
Not smart.
That's not a, yeah, it's going to save you money right now in those monthly payments, but guess what? Boy and boy, can that come back and hit you.
Right.
Yeah, so in this particular example here, let's say you've got a fire that causes $500,000 in damage. So here's where the insurance math breaks down. So what you bought divided by what you should have bought times the loss, meaning that, keep it very simple, you bought 1 million. You were supposed to buy 1.8. The difference between those two is 56%, meaning that if you've got a $500,000 fire claim, guess what? You only get 56% of that of the payout, which would be 277,778. So
Yeah,
the
it's brutal.
shortfall, 222,000. That's crazy.
Yeah.
So you thought you were covered, but know your co-insurance percentage, and then also ask about an agreed value endorsement to avoid penalties. But you just have to make sure that you're covered. That's it. You have to make sure you're properly covered, because basically what co-insurance is, it's not another insurance. It's actually a penalty. So you're going to get hit by the percentage of your penalty for what the difference is between that actual value versus, I'm sorry, not the value, but the actual amount you're supposed to have versus what you actually bought. So that's a quick, easy breakdown for everyone.
Yeah, and really what it comes down to is two things. One, read your policy, which we know you're not going to do.